The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome this Monday morning to Squawk Box Europe. Yeah, we are in June. Can you believe it, everybody? Who have we got today? We've got Karen Cho, Juliana Tattlebaum, and myself, back from Hull, Steve Sedgwick, and these are your headlines. Well, the EU says it's prepared to impose countermeasures after Donald Trump doubles tariffs on steel imports, whilst the US and China accuse each other of undermining their Geneva trade deal.
Trump-backed nationalist Karol Nawrocki wins Poland's presidential election in a blow for Prime Minister Donald Tusk's centrist administration.
And French pharma group Sanofi agrees to buy U.S.-based Blueprint medicines in a $9 billion all-cash deal.
Well, I mean, I had a week off. Nice to see you both. Yes, and I know you back. More than held the fort. In fact, apparently the show was even better without me. But the fact of the matter is, it's the same old nonsense. Bank of New York and everyone else. New month, same old worries. But same old nonsense as well. When will this administration realise that actually, if you want long-term investment, you have to give long-term confidence and basic confidence from investors and countries and partners, not foes, that's a key point, that actually policy isn't just going to change on a whim. So, you know, you come to a rapprochement, a détente with China. You have a rapprochement, a détente with the Europeans. And all of a sudden, boom, you undermine it by saying, yeah, actually, we're going to double those tariffs again. Yes, the traders love it. Yes, basically the trading arm of Goldman's and JP and everyone love it. But the deal makers are crying. The consultancies are crying. The McKinseys of this world are crying because they can't get the clients to do anything longer term. Trust me, look at the consultancies. They're in an absolute turmoil, complete turmoil at the moment because they can't get people to convict to longer term trades and longer term actions because they just don't know what's going on with policy.
I'm so glad you picked up on the uncertainty, because I think a lot of the data that has been rolling through is looking a little bit more encouraging than it should. And what I heard from some of the countries that I was speaking to when I was in Croatia last week is, look, that there is a domino impact economically, almost like that second-round impact of oil prices, that second-round impact of tariffs, where you may not be seemingly directly exposed because you're not doing business with the United States, but the countries you are doing business with in Europe are now turning cautious because their business with the United States is turning sour.
I'm glad you mentioned the oil price, because actually, it's a great example. Now, people might not like what OPEC does and OPEC Plus does, but my goodness me, having spent 20 years looking at what the Saudis, because basically the OPEC is run by the Saudis. I know they don't like us saying it, but they are the kingpins of it. They appreciate that it has to be the right price for buyers and sellers over the medium to longer term. Saudi never does anything. Well, they never preempt by doing something that's going to be a short-term fix, or at least they try not to as well. They want it to be longer term because they want people to buy the product over 20, 30, 40, 50 years, because that's how long they want to get out of the new facilities they're putting in as well. So what Trump is doing is all knee-jerk kind of stuff. He's getting upset. And he's probably upset about what you did a social media piece last week. I hadn't heard of it. A new acronym.
The taco trade.
Taco trade. Trump always chickens out. He hates that.
He certainly does, and it was also the first time I think I'd seen him anyway not be familiar with the term that's circulating in the market. When you heard our colleague Megan Casella in the Oval Office ask him, what do you think of the taco trade? He said, the what? What does it stand for? They hadn't briefed him on it.
Do you think it was like the Emperor's New Clothes? No one dared tell him that they're saying he chickens out.
Apparently that was going around, that he hadn't been briefed about it. But we heard about it really early last week. It was going around some of the market circles and some of the investment notes that Trump always chickens out. And then, of course, it became a meme by later in the week. It really caught on in popular press, not just on investment circles.
Because he doesn't like it and he thinks it's not true. So we mustn't mention taco, no taco, and no always chickens out.
Well, you have to hand it to the Financial Times. Robert Armstrong was the one who coined the term. He did a brave move to coin a term like that when you know that the Trump administration holds on, President Trump holds on to things like that.
Have you seen MAGA now too is a new one? Make America Go Away. So instead of being the original MAGA, which is of course what Trump coined, it's a different term of markets as well.
It's never going to happen though. It's too important. It's too important. And all those people say, oh, we're doing trade deals without the Americans, or we're doing it without the Americans, or we can have a global system without the Americans, or we can defend ourselves without the Americans. Forget it. We need the Americans, and that's why we need confidence in their policies. Right, the EU says it's prepared to respond after President Trump's decision to increase tariffs on steel imports from 25 to 50%. They're doubling down. An EU spokesperson told NBC News Trump's decision would add further uncertainty to the global economy and increase costs, saying the bloc is prepared to impose countermeasures, including in response to the US president's latest move. Well, the president announced the tariff increase at a rally at the US steel site in Pennsylvania on Friday evening.
Nobody's going to get around that. So we're bringing it up from 25%. We're doubling it to 50%. And that's a loophole. And by the way, I have to tell you, I believe that this group of people that just made these investments right now are very happy, because that means that nobody's going to be able to steal your industry. It's at 25%, they can sort of get over that fence. At 50%, they can no longer get over the fence. So congratulations to everybody and to you for making a great deal. You just made a better deal, right?
Well, we'll see if this latest escalation in trade tensions translates to volatility on the market. We ended last week essentially flat. It was a muted session on Friday. But for the month overall, the month of May, it was an incredible one for U.S. markets. You had the NASDAQ gaining almost 10%, the S&P 500 gaining about 6% over the course of the month, and the Dow Jones adding about 4%. So this was the best month since November 2023. Obviously, a lot of the gains, a lot of the turnaround came after that May 12th deal between the U.S. and China. And now over the weekend, it seems like we have seen an escalation yet again in the tensions between the U.S. and China. Speaking of China, let's take a look at the Asian markets, bearing in mind that China markets are closed today for the Dragon Boat Festival. But outside of China, in the region, we are seeing a pullback. So perhaps the tensions are weighing on sentiment there. You've got the Nikkei 225 down about 1.3%, the Hong Kong market down 1.6%, the Kospi over in Korea holding up a little bit better, down just 4 basis points today. Looking at European futures, what's in store for the start of trade, the fresh month underway here. We are looking at a bit of a pullback at the open at this stage. All of the majors here in Europe are looking to come under a little bit of selling pressure. But again, after a strong month in May for European equities as well, the Stock 600, the main benchmark, up about 4% for the month.
Let's talk about the trade backdrop, as China has accused the U.S. of violating the agreement reached between the two countries in the Geneva trade talks, saying new export restrictions on chip design software and the announcement it would revoke visas for Chinese students seriously undermine the deal. The comments come after President Trump accused China of breaking the deal. Trump didn't specify what China had done to breach the agreement, but the Wall Street Journal has reported the deal is at risk of falling apart over China being slow to approve export licenses for rare earths and other critical minerals.
Let's welcome Anthony Gardner, former U.S. ambassador to the European Union, to the program. Thank you so much, Ambassador, for joining us this morning. So last week, the court order in the United States cast some doubt on President Trump's tariff agenda, those reciprocal tariffs in particular. To what extent has that given leverage to the countries negotiating with Trump at this stage, from the European Union to China?
I think they have more time to play because of that, even though they know very well that there are other legal bases for the president to proceed, although those legal bases, as you and your listeners will know, are longer and more complicated and more limited in scope. The wonderful thing in Trump's view about the International Emergency Powers Act, the Economic Powers Act, is that it allows him basically to do anything he wanted. So we thought, until the court struck that down. But we'll see. You know, it's on appeal, so it'll be a while. The answer is, I think the Europeans, for example, have more time to play. Although I have to tell you this, I think the markets are being incredibly sanguine right now, not just because of latest comments from China, about China, but that the deal with Europe is going to be much more complicated, because the demands on Europe are far broader than just about tariffs. Trump thinks, believes that the EU should give up many things in regulations and tax and also in food standards, and those form core part of the EU's legislative agenda.
So how do you see this playing out, given all of the challenges that you just cited, the sticking points? It feels like it's incredibly optimistic to think we could get a comprehensive deal between the EU and the U.S. anytime soon.
I think it's going to be very difficult. Look, Trump sees the EU, and he's said it many times, as worse than China, but smaller. And what he really doesn't like about the EU is that the European Commission represents the 27. However, he does see the EU as a wonderfully inviting target because he thinks that it is divided, which is true. There are several MAGA sympathizers in Europe. And he doesn't believe that EU really has the retaliatory capacity which China has, and China obviously can act much faster than Europe. So this is going to be quite difficult. My advice to the EU is, however, is to look at what happened in the China deal, where essentially Trump got nothing. China retaliated tariff for tariff, and then Trump backed down. You just might mention the taco trade. So to those in Europe, and Giorgia Meloni of Italy is one of them, who believe that the best thing to do is simply to negotiate and not to remind Trump of what the EU can do seriously to retaliate, I think are just inviting a very bad outcome.
Ambassador, it's really, really great to hear your views. Thank you very much indeed. Look, it's quite simple, isn't it? Europe just needs to solve a couple of problems with one issue, i.e. buy more US gas. There are companies in place who are desperate to get that gas from the United States where it's not needed to Europe as well. Buy more product, and actually a lot of the other problems will go away. The Europeans do need to defend themselves more. They do need to find cheaper sources of energy. They do need to actually have that investment from those big US tech companies as well. We don't need to worry about an all-encompassing, multifaceted trade deal. We just need to do enough, don't we?
Well, yes to all of what you said, except Trump doesn't believe that's enough. I mean, that's what happened in 2018. The EU and the US met in the Oval Office, the representatives, and announced a big, beautiful deal whereby Europe would buy more gas and buy more soybeans. And now you mentioned, well, defense. Yes, Europe could announce more defense purchases, but that's not enough. Trump has made it very clear. He sees a lot of the digital regulations the EU has passed as problematic, and on privacy and on tax, VAT being one of them. The food standards as being very problematic, as he says they are protectionist. So yes to what you said, but that's not going to be enough. And I think the EU realizes that. That's why this is so difficult.
Yeah, but I can't help thinking, and I want to combine what my colleague said with what you said. My colleague was saying, actually, some of the data, it's been absolutely fine. And you said quite rightly, the markets, they've been absolutely fine. But if the market started to turn, specifically the bond market, but of course the equity market as well, and the data starts to turn as well, that would ratchet up the president perhaps more than some of the trading partners could ratchet up the pressure on him as well. If the economics start turning sour and the markets start turning sour, Ambassador, perhaps that'll be the catalyst for a deal rather than anything magnanimous that the Europeans can offer.
Completely right. I agree with you. Look, it's only the bond markets, the equity markets that will control this president. So the question is, will they turn, and when, if they turn, will it happen? And in the magnitude sufficient for him to consider changing. Now, remember when he announced all those tariff measures several months ago, and the markets responded very abruptly. Many people, I'm assuming like Scott Bessent, went to him and said, we're standing on the edge of a precipice right now because an vicious cycle could be happening in which I guess the hedge funds will be dumping, U.S. denominated assets like the treasuries. So we have to do something, and he did something. The question is, will this happen again? Will they try to avoid it happening in this long drawn out process of negotiations with the EU and others? That I don't know.
Ambassador, let me just weigh in on the critical minerals side, because it's fascinating as you talk about Scott Bessent. He was also weighing in and criticising the Chinese for not sending products on critical minerals, rare earths. And some are saying, look, that's great irony, given the trade war is designed to stop some product coming out of China. But Bessent's complaining that this impacts supply chains in India to Europe as well. How does the world need to think about these critical minerals if we are in a world where some of these key components are going to be withheld from various partners?
Well, we have to be realistic. That's the point. We entered into this, in my view, crazy tariff war without stockpiling critical minerals. How could you possibly enter into a tariff war without preparing for it? And we haven't. And the Chinese know this. They're not stupid. They realize that they have major cards to play. They've been rattling their saber, so to speak. They've done it on some important chemicals. They've done it on some important minerals by either stopping or making more difficult the exports of those minerals, which are essential, by the way, not only for an economy, but also for our defense. So I think we have to be realistic about the sequencing. I mean, we will become more either independent, or should we put this way, less vulnerable to Chinese supplies, but it will take time. These investments take time. I know we are doing it with some of our partners around the world. In fact, it started under the Biden administration, is being continued now. But let's be open-eyed and absolutely clear about where we stand today. We are still vulnerable to many key materials coming out of China.
Ambassador, I also want to ask you about U.S. interference in European elections, and Poland specifically is one, because we did have the U.S. criticising the Europeans for not being active enough for what they claim was foreign interference ahead of the election, only for then the U.S. Secretary or Home Secretary to get involved and throw support behind the nationalist candidate. Extraordinary turn of events here. What would you say about that American approach to European elections?
It is extraordinary. It's extremely disappointing that we are supporting what can only be described as extreme right-wing movements in Europe. And by the way, the party that this administration is supporting in Germany, the AfD, Alternative for Germany, has been labeled by its own intelligence services as an extreme right-wing party with pro-Nazi members among them. And this has been played out not just in Germany, but now, as you mentioned, in the Polish elections and also in Romania. This is against any precedent that I can recall in U.S. history. This is not a partisan, point on behalf of the Democratic Party. I mean, no Republican president would have done this by any stretch of the imagination, that we are trying to actively divide the EU and make it weaker so we can extract advantage from it. That's extremely disappointing. It's not in our self-interest over the long term.
Ambassador, thank you for joining us today and for being so forthright with your comments. We do appreciate it. Anthony Gardner with us, the former U.S. ambassador to the European Union. U.S. Treasury Secretary Scott Bessent has insisted the U.S. will never default on its debt. Speaking to CBS on Sunday, Bessent said, quote, "We're on the warning track and we will never hit the wall." The U.S. debt ceiling would be increased as part of the budget bill passed by the House of Representatives, which now faces Senate scrutiny, with Bessent previously telling lawmakers the country could exhaust its borrowing authority by August without action. House Speaker Mike Johnson spoke to NBC's Meet the Press, looking to dismiss projections from the Congressional Budget Office that show the budget bill adding to the U.S. deficit.
They're assuming a growth level of 1.8% over the next 10 years. Kristen, never in U.S. history has the U.S. economy sustained less than 2% economic growth over a 10-year period. What's going to happen here is exactly the opposite. We're going to have historic growth because we're basing this on the history of the recent past. Remember, in the first Trump administration, the 2017 Tax Cuts and Jobs Act, the CBO was off in its estimates of that one by $1.5 trillion, okay, because they underestimated the incredible growth that would be brought about. This is going to be jet fuel.
Coming up on the show, IATA projects growing airline profitability this year. We'll bring you our conversation with Director General Willie Walsh. Plus oil prices move higher after OPEC Plus holds the pace of production increases steady. And we'll dig into the outlook for AI and autonomous driving with Wave CEO Alex Kendall. Don't miss that conversation at 8:30 London time. Welcome back to Squawk Box Europe. Airline profitability will strengthen slightly in 2025, according to the International Air Transport Association's annual airline financial outlook. Net profits are projected to hit $36 billion, with traveler numbers reaching a record high of just under $5 billion. Both those figures are improved from last year, but are below IATA's previous forecast. That's fascinating given the economic uncertainty on the horizon. So let's get more from Monica Petrelli, who joins us now and has been speaking to the IATA Director General. Monica, good morning.
Good morning. Yes, the industry certainly knew that a shortage of jets and jet parts would persist into 2025, but seemingly surprised by the amount of market uncertainty that has resulted from the rollout of tariffs from the Trump administration. We do see IATA issuing new outlook for 2025 numbers today, effectively saying, well, the year may not be as good as we once thought it would be, but still looks to be slightly better than 2024. Now, as mentioned, net profits revised down, hitting about $36 billion instead of the $36.6 billion once expected. Total revenues still expected to hit an all-time high of $979. That's still shy of the $1 trillion mark that was expected at the end of 2024. Air cargo volumes supposed to go up slightly, but however, revenues will drop 4.7% according to IATA for the year end. Now, the total number of travelers by the end of 2025, well, that is expected to be 4.99 billion people. That's up 4% from 2024, but still shy of that 5.2 billion that was projected back in December. Now, several upsides, though, here on the ground in Delhi. One, the incredible excitement coming out of the market from India that is expected to roll out. This is outbound travel coming out of India, expected to persist for the next 10 years and beyond. But more immediately, we're seeing the continued drop in oil prices and how that is affecting airfare. Now, for more on this, we spoke with Willie Walsh. He's the former CEO of Aer Lingus, British Airways, and AIG, current Director General at IATA. Here's what he had to say.
What we see historically is that there's almost a direct correlation between the oil price and ticket prices. So when the oil price comes down, and we are expecting a reduction in our oil bill this year, ticket prices come down as well. So we're seeing strong demand. We're seeing supply shy of the demand, principally because of supply chain issues. But when you put it all into the mixer and look at it, I think it's still going to be a good environment for consumers. Competition in the industry remains fierce. There's a lot of opportunities and options for travellers. So I think the general environment is positive towards consumers, and I think will be positive towards the industry as well.
During a session yesterday, the head of IATA America is saying the Trump administration has launched what is called a 232 investigation that looks into whether importation of jet parts into the United States is a national security threat. Now, IATA is saying it's submitting comments to the Commerce Department on this, effectively saying this doesn't make sense because the United States is the largest exporter of jet parts, and that retaliation, if tariffs are imposed, IATA expects would be significant. Now, just here as a reminder, the mere launching of a 232 investigation does not mean the U.S. government will impose tariffs. However, it is certainly indication that it might. Back to you.
Yeah, Monica, I want to pick up on that, and I know you've got a brilliant Air Canada interview coming up later on, which I'm really fascinated about, especially. But I hear the British press are all over it. Loads of anecdotal stories about Canadians not going south of the border, about Europeans not going to the US, about the Chinese not going across the Pacific as well. I personally can't wait to get to the States, regardless of who's in the White House, what have you. Is there real evidence now that actually US tourist numbers are dropping aggressively?
There is, but no culture is being affected more or responding to this more than Canada, which is why I'm very much looking forward to this interview coming up with Air Canada's CEO. We are also seeing, though, Canadians not deciding simply to stay home. They're looking to go other places, in some ways crossing right over the top of the U.S., heading down to Latin America. We are seeing some routes getting more popular, places like Mexico and other parts of Latin America. But we'll bring you more on this later today after our interview.
Nice work. Loving your work. Thank you very much indeed. Look, guys, I mean, can I say to all our viewers out there, so what? You don't like the president, so let's say half you don't like the president, half you do like the president, if we're talking Democrat versus Republican. What, you wouldn't go to a country because you don't like the leader? I mean, let's work this out. What? So, I'm not that keen on Macron, I'm not going to France. Or anyone got a kind of view on, I don't know, think of a leader.
It's not about the leader per se, it's about people in the U.S. And there is evidence to suggest that Trump's voters, people who support President Trump, have followed his line of thinking that he doesn't like the EU. He says that the EU is set up to screw the Americans. And now you're seeing, so that can translate. I think there is a concern that translates to hostility, animosity toward Europeans.
Really? I've never, do you know, I've worked for the Americans for, even before this quarter of a century I've worked for CNBC. I have never, ever encountered hostility from Americans on this side of the Atlantic or on the other side of the Atlantic because of who's in the White House. I mean, again, you may like Trump, you may not like Trump, but who gives a damn if you're going to go and see a great country? It's
the optics, isn't it? You use the word hostility. When you use that word in tourism, I think about Spain pushing back against tourism at this stage. So I think it does work in many different ways. If there's a feeling of opposition in any country, you think, well, I'll just go somewhere else.
How do you feel about Viktor Orban? A lot of people don't like him. Because they say he's an autocrat, say he's been around about 15 years. Budapest is fantastic. It would not stop me going to Budapest because of Orban or whoever the government is.
But I think Karen makes a good point. When you think about the over-tourism initiatives that we're seeing in Spain, in Italy, if you're aware that the people in those countries actively want to crack down on you coming to the country,
Mallorca, last summer, I saw all the pictures in the Daily Mail. Not that I look at the Daily Mail as often. Okay, all the tourists, they hate the tourists. So I went to Mallorca. I was 2 weeks in Poyensa. It was magnificent. I didn't encounter one person who was mean to the Brits.
But I think what it is, though, is that link from the president or from government to the people. And if people perceive that it's there and that they may encounter some hospitality,
the euro and the pound are flying against the greenback. Why wouldn't you go?